What is going on, everybody? Welcome into another edition of the Daily Energy News Beat Stand Up here on this gorgeous Wednesday, December 28th, 2022. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, energynewsbeat.com, Stuart Turley. My man, how we doing today?
It's a beautiful day in the neighborhood, and I'm back in bear country.
You've got a smile on your face, which that only means you must be back in bear country. That's awesome. And we have a great show for you guys lined up today. As I'm sure everybody saw, Putin has come out and banned sales of Russian oil to countries that comply with the G7 price cap. Who would have saw that coming? Stu will dive into what all that means for the global energy markets. U.S.-China relationship continue to struggle for domestic resources in Congo, specifically over cobalt. Stu's going to cover specifically what's going on with that cobalt mining down in Congo. Just as a heads up, it's not pretty, unfortunately. The Middle East is investing billions into clean energy. We'll cover what that means for the energy markets in 2023. Physical attacks on the power grid surge to new peak. Well, that's not good. And then finally, as only Stu would have it, 15 economic facts that prove an economic meltdown is already happening right now. So unfortunately, I can't wait to see what happens there. We also will, with the markets being open today, we will cover what happened in the oil and gas markets, specifically with oil and gas prices. We did see oil spike up to around $81, currently trading about $79.84 here at about 4 o'clock on the 27th. On the nat gas side, we're trading about $5.22, but we will cover all that and a bag of chips at the end. But first, guys, as always, check us out online, www.energynewsbeat.com, the best place for all of your energy news, from geopolitics, finance, just what's going on in the overall market. It's the best place for all your energy news, www.energynewsbeat.com. But enough of the pleasantries, Stu. Where do you want to begin?
Hey, let's start with my buddy Putin. Putin bans sale of Russian oil to countries that comply with the G7 price cap. In this article, Michael, I think it's really funny. Putin says that no oil will be sold to any country without his personal approval. Russia's actions are a response to what the decree described as unfriendly actions by the U.S., foreign states, international organizations that contradict international law and are designed to protect the national interest of the Russian Federation. No oil for you. What was that? The soup Nazi?
No soup for you.
No soup for you. And now it's no euros for you, which is the Russian oil. In other words, those nations buying euros, mostly China and India, I'm reading from the article here, are not violating the G7 pact right now. However, once euros follows Brent a little higher and its price goes above $60 a barrel, that will change. Mm-hmm. And at that point, it will be interesting to see how the G7 responds to the two fastest growing economies and the two most populous nations defying the G7 Russian price floor. Michael, there's a lot in this right now. You and I were talking yesterday about the China coming back, and you were not going to put your deathbed arguments on there, whether or not you were going to bet on pricing, whether or not China was going to buy oil or not. And so, and the increase the prices. Guess what? The sanctions won't work. It's like the EU is fighting, Russia is, Putin's fighting an unarmed opponent in a chess match, and they've already lost. What are your thoughts?
I mean, I think it's very interesting you bring up. Buried deep in this article, I thought was great, and I'd be remiss if I didn't say it. It's, in other words, those nations that are currently buying Russian euros, mostly China, India, are not violating the G7 pact yet. However, once euros follows Brent higher and prices rise above $60 a barrel, that will change. And at that point, it'll be interesting to see how the G7 responds to the two fastest growing economies and the two most populous nations. So here's what I'll say. I may have been wrong about China. Okay. But I'm fine with that because that means prices are going higher. I'm always down to be wrong if prices are going higher. If prices go down, I hate being wrong, or I hate being right. But in this sport, I'm down to be wrong. It'll be very interesting to see for how long China and India keep buying Russian crude. I think at this pace, they're going to keep buying it, and they will probably buy it in violation of the G7 summit and this G7 pact. So what does that mean for prices? If there's sanctions, but then the sanctions are being ignored, what's going to happen is, as you aptly mentioned, China and India are going to receive lower price euros, maybe higher than $60, but definitely not what prices are at currently trading, which is about $80 right now. But the rest of the world, as it mentioned at the beginning of this article, Russia is the second largest exporter of crude oil. Those barrels are only then going to be available for China and India, meaning the world supply is actually going to fall a little bit.
Yep.
Increasing prices ever so slightly. So I think this is a very interesting move by Putin because I think he knows if China's going to reopen, they're going to have massive oil demand, which means they're going to need as much oil as they can. And if he can set up an exclusive trade with China and India, but more talking China here specifically, it makes it an undeniably great trade for Russia, a great trade for China, and it hurts everyone else. So once again, this G7 sanction, this oil price cap, is first order thinking. Let's cap oil prices so that Putin can't make more money. Well, have we thought about the second order effect, the third order effect? We've covered it ad nauseum. You know where we stand. I'm happy to be wrong when it comes to China oil demand, but from this standpoint, prices might rise not because of China oil demand, but because of this sanction.
And sanctions don't work, and all it does is make Putin mad, which is stupid. The next article coming around the corner here, and by the way, I'm not a Putin fan. It's just you got to be a little smarter than he is. And all right, coming around the corner, Michael, we got U.S.-China struggle for DR Congo resources intensifies. This is absolutely criminal. And when you take a look at this, where is it in here? I'm going to read from the article. Aside from a Jeff Bezos and Bill Gates backed cobalt mine in northern Zambia, details are sparse, but it does mark a major turning point for the DRC. Michael, Jeff Bezos and Bill Gates are supposed to be these big philanthropists, and they're all out there and all that. And they're taking they're taking care of child labor, and they're doing all the wrong things. And they're now out there. Boy, they kept that quiet, didn't they? So on this one, China sources 60% of its cobalt needs from the DRC, and about 80% of the world's cobalt processing occurs in China before being incorporated into lithium-ion batteries. The DRC-China relationship is on the rocks because China mining is starting to encounter increasing amount of bumps in the road. This is just nuts.
Yeah, I mean, I think it's one of the dirty, and I wouldn't even call it a secret, but I think one of the dirty and lesser known facts about critical mineral mining is that the majority of it takes place in third world countries.
Right.
And the majority of the cobalt that is produced by some form of indentured servants, people making less than $1 a day, and flat out child labor, and possibly, I'll go as far to say slave labor. So I think there's a huge, what I think this article is pointing to is the mess and the entanglement that is happening in this push to EVs. And again, not to beat a dead horse, it's first order thinking.
Right.
We need cobalt. Let's go get cobalt without thinking about how are we getting the cobalt? We make a big deal about Foxconn factories in China. We have, I remember 10 years ago, 5-10 years ago, it made the rounds on social media of the nets that they have around Foxconn to stop people from jumping off cliffs, literally to catch people trying to commit suicide. Well, what's going on in the Congo is much worse than nets. You've got children in open pit mines with hammer and nails, no PPE, slamming and extracting cobalt, specifically, or extracting cobalt with their hands from the ground, sending it over to processing facilities that take place in China. If we're going to move to an all-electric vehicle fleet, we have to address the issue that, as it says in this article, 15 of 19 primary cobalt mines in the country are controlled by China, with the rest being controlled by European companies, specifically Glencore, and there's 2 other ones.
Right. But
they don't care about human rights.
Now,
let's just be honest.
Here's what makes me just airsick, Michael. The International Monetary Fund got involved and put a loan out there for Zambia in 1.9 billion, I believe. I have to go look at that. But the International Monetary Fund is out there funding all these green projects and everything else. And then they're stealing from the African people on their resources and not paying them. This is energy hypocrisy at its finest.
Yes. Okay. And I mean, we could spend a lot more time talking about the travesties that's going on in the DRC right now, and specifically when it comes to cobalt mining.
Yep.
And it really just makes me sad, to be honest with you. I would encourage you guys. There was a recent episode on Joe Rogan's podcast where he interviewed an author who had spent multiple years in the DRC covering cobalt mining. It's absolutely tragic what's going on over there, and I think it honestly makes it, I look at all of the tech sitting around me and all the cobalt that I know is in these computers, and it really makes me sad, because you wonder how many kids were involved mining this. As sad as that sounds, it's unfortunately the truth.
Yep. And energy hypocrisy is disgusting. Okay. Let's go to the renewables. The Middle East is oil and gas nations pouring billions into clean energy. I found this article very interesting. It came from Alex Kimani from Oil Price. And in the current year, Saudi Arabia and several other Middle East nations have reported rare budget surpluses thanks to high oil. They're taking that, and according to the kingdom's finance ministry, releasing what said preliminary estimates, the surplus clocked in at 102 billion rials, or 27 billion, good for 2.6% of gross GDP for 2022. That's nuts. Guess what they're going to turn around and do? They're going to turn around and use that money to go back in, and they're going to put 23 billion into a green and sustainable, quote unquote, area for hydrogen. They're wanting to be the world's hydrogen. Saudi Aramco said it plans to spend 110 billion over the next couple of years to develop the gas field, which is to hold 200 trillion feet of gas. So they are all in on doing their gas, Michael, but they're using it to fund renewables. Thought that was pretty interesting.
So just to, this is a question I have for you. You can take off your news hat and put on your commentator hat. What is in it for Saudi Arabia to get into to wind and solar? I see getting into natural gas. You can export it. You can send it anywhere in the world. I can see getting into hydrogen. It's the same thing, specifically the blue hydrogen. Why would they be going all in? And it's a question. Why would they be going all in on wind and solar when they have so much domestic resources? And it's not like you can send wind energy across to Europe or over to the United States. It's kind of just there. Where do you think they're going with this?
Let me answer 2 things. Their number one focus is oil and gas until they can get hydrogen rolling. Hydrogen, they've already said they want to be the number one supplier in the world for hydrogen. Where they get wind and solar is in bragging rights. And as we go play things, it is bragging rights, Michael. So they can sit there at COP 27, COP 28 and say, we're putting in some wind. So that's exactly all they're going to get out of it. And they don't have to do the tax subsidies, Michael. They don't have to do the tax subsidies because they are a sovereign nation. I mean, they're a sovereign run organization from the kingdom. Does that make sense?
Yeah, no, I completely agree. I just, them roll, they have a plan to develop 60 gigawatts of renewable capacity by the end of the decade.
Right. But
I have a hard time seeing what is that just them? Is that their version of ESG? Hey, we're going to throw
yes,
15-20 billion at quote unquote ESG so that we don't get pounded by the international community. And we can
exactly.
talk
That's
with
all
one hand and do. I mean, then
that's all it
yes,
is.
it makes sense. It just ESG and it's gone too far, man. It's
It
gone
has,
too far.
and I have to hand it to the Saudi leadership. You've heard me say this before. They think in decades, they think in 20 decades, they think in 30 years, and they're taking care of their country. They're taking care of the world market, and they are doing. Do I agree with what they're doing? No. Do I agree that they flipped off President Biden? Yes. Were they authorized? Were they really in the right to do it? Heck yes. Are they doing what they need to do for their citizens? Yes. So I'm my hat's off to Saudi Arabia. So anyway.
No, again, I'm with you. I find it confusing. But I have very little doubt. I doubt that we'll see a wind farm. I can't wait to see the wind farm in the desert. That's all I'm waiting for. The wind farm in the desert. There. What do you got next?
The wind farm in the desert. Can you imagine? Right now, we're finding that the report I'm working on is like the mean time between failure on windmills is 8 to 9 years instead of 20. Now, that being said, could you imagine with some dust and some sand getting in them bad dogs? You probably only have 1 or 2 years before they'd fail.
Yeah, it's not good. It's not good.
No, it's not good. Okay, this next one we're going to go really quick on, Michael. Physical attacks on the grid surge to a new peak. Now, this is the physical and computerized assaults on the equipment that delivers electricity at their highest level since 2012, including 101 reported this year at the end of August. So that doesn't even count for all the other ones. In 2021, there were 97 incidents. They just had one that knocked out 45,000 people, Michael. So the point of this is the grid is not hardened. We just got the infrastructure bill, which is in this next 15 articles. So I just want to throw that out there. The grid's got problems. There are people that want to take it down. Get your home ready for multiple sources of energy so you can survive without the grid. Now, that being said, let's go to my favorite article of the day, Michael. Are you ready?
I'm not ready, unfortunately, for this.
This is 15 facts which prove that a massive economic meltdown is already happening right now. Hang on to your carcass because this is where we're going. In 2023, we find ourselves in high inflation. Okay, let me just go through some of these. Existing home sales have now fallen for 10 consecutive months. Home building or settlement has now dropped to 12 consecutive. The number of single family is now for 9 months down in a row. Let's go ahead. November, we witnessed the largest decline in retail sales that we have seen. The biggest names on Wall Street are starting to let workers go, and it's reported that Goldman Sachs will lay off 4,000 employees. Federal Reserve is admitting that number one, actual jobs in the United States has been overstated by 1 million. The Federal Reserve is admitting the number of actual jobs in the U.S. has been overstated by 1 million. Michael, they have been falsifying reports to look better for political gains. Okay, let's go to U.S. jobs were 400 cuts were 417% higher in November than they were in the same month a year ago. 2/3 of all Americans from a Wall Street Journal survey expect the economy to get worse next year. 70% of the U.S. economies believe that the recession is coming in 2023. There's a couple more in here. 63% of the U.S. population is now living paycheck to paycheck due to the rising cost of inflation. Vegetable prices, more than 80%. Inflation continues to control at a head of lettuce is now $11 in one grocery store.
Who's buying a head of lettuce for $11? If I ever see lettuce at $11, I'm skipping, going to something else.
Oh, that's right. Okay. So this article has so much meat in it, and it goes into more on the omnibus bill. And the omnibus bill is porculus on steroids. I can't even.
This is just a depressing article because you'd like to think we're not in a recession right now, if only because the jobs numbers have looked good. While inflation is high, the stock market isn't taking a huge pounding. I mean, it definitely lost some last year, but I think this article lays it out. If we're not in a recession already, which we are, we're imminently about to jump off the cliff, and we're probably at the point of no return. So again, not to keep throwing doomsday stuff down everyone's throat. It is
Michael,
sketchy out there.
I am not going to read through what's in this article because it's a bunch of money. More 750 here, 850, 3.6 million, 3 million here, 1 million. This is more than what they're going to spend on the grid to even. They're only going to put 16 million into the grid out of 1.7 trillion. Anyway.
Yeah, it's unfortunately depressing.
That list. Anyway, I think we're going to have a pretty rough year in 2023, but I think we're going to make it. I think as Americans, we are going to pull together. I think that there are some solutions out there, Michael. And I know I'm Debbie Downer today, but I'm also, it's a beautiful day in the neighborhood, and we are going to get through it as Americans.
No, I mean, I think that's the one thing that you have to say is the resiliency of the U.S. people is outstanding. So again, we're not moving into 2023 very well. If you are in oil and gas, though, 2023 may be a great year, as we've covered a lot. Energy prices look like they're going to have a great 2023. The real question will they go up? If we look at crude oil prices right now, Stu, currently trading about 79.53. Market settles. Looks like it'll open at about 80 or 78.87, but we'll see that open here very shortly. Really, the only thing that buoyed prices was the fact that we had Putin come out and say that he's not selling oil to anybody who abides by the $60 oil price. So, that didn't necessarily that had an upward effect on oil prices. We have seen it some softness recently. Again, as the overall economy goes, so will oil prices. SPY was down 0.4 of a percentage point. NASDAQ tumbles 1.5 percentage points. Tech stocks just not doing well. As we mentioned last week, ExxonMobil now trading higher than Tesla. I think we've all been waiting for that. Markets are awaiting the EIA storage numbers, which will drop here at about 10:30 on the day that you guys are listening to this on Wednesday. Expectations are for a little bit of a draw. our expectations are for a little bit of a draw, but we will see how that all plays out. On the natural gas side, currently trading about $5.02. A lot of the analysis I'm reading is everyone just chilled out over the Christmas break and stopped sort of reacting heavily to weather models here, weather models there. Again, markets are awaiting the injection numbers that will come out on Thursday, as again, Freeport LNG facility looks like to be that back half of January or start of February. That's kind of that date we're targeting to see an increase in domestic natural gas prices, if only because a lot of our LNG will now be shipped overseas. But everything's been fairly quiet. I think the only other thing that I found interesting today, Stu, is Marathon Oil did officially close on its Eagle Ford acquisition of Ensign Natural Resources. If you guys remember, that was a $3 billion deal down in the Eagle Ford. Those assets are about 99% operated, 97% working interest, and they span Live Oak, Bee, Karnes, and DeWitt County, all across the condensate, wet gas, and dry gas phase windows. Wet gas right now is selling for a huge premium right now. And again, the Eagle Ford has some really great gas analysis down there. They believe they're going to be with running one rig. They can turn on 35 to 40 wells to sales per year. That's with one rig. So whoever the IR guy of the week is, Karina Brooks, IR woman of the week, yikes. No. That's the media relations content. IR guy of the week, Guy Baber. One rig's going to be turning on 35 to 40 wells to sale. Eek. We'll come back in a year and see what happens there. I'm doubtful. I am doubtful one rig's getting 35 wells, but we'll see.
Hey, maybe if they're really, really small.
Maybe if they are really small. So that's about all I've got today, Stu. What else you got?
Oh, hey, it's a beautiful day in the neighborhood, and we got to keep our positive light moving forward, dude.
I love it, guys. And we will, again, bring you all of the latest energy news. We appreciate you guys taking time out of your busy day to sit with us. But with that, we're going to let you get out of here, finish up your day, or get back to work. For Stuart Turley, I'm Michael Tanner. We'll see you guys tomorrow.